Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES balanced within a narrow range in the upper part of yesterday's range, and we even made a marginal high beyond yesterday's high of 2168. So at this point, ES is balancing right near the edge of the current balance area. We know that the buy side has been dominant and is in control, and as long as ES can hold above 63.65 off the open, it would tell us that buyers are continuing to be dominant. Now, even if it pulls back a bit more, it doesn't really change the larger time frame bias. That's going to continue to be bullish, but holding above 63.65 does tell you that the overnight range for the most part is intact, and from there we can continue balancing and eventually possibly put in a breakout beyond the 70 to 72 half area. We saw a breakout in NASDAQ yesterday and a new swing high in the Russell as well. So at this point, if ES can even maintain itself up here, it could lead to a break to the upside. Now, the main catalyst today is the FOMC announcement at 1 p.m. Central Time. And most likely, ahead of FOMC, we will continue to balance within a range. It doesn't mean that we can't break to the upside or make a marginal high, but typically the price action is very balanced ahead of the FOMC announcement. So just keep that in mind, that the opportunity potential ahead of FOMC could be fairly limited. On the downside, if we do break 63, we still have decent support at 59 to 61. We have the previous VPOC there, as well as a developed high volume node in the 59 quarter to 60.75 area. So that entire zone consists of a important high volume node within the current balance. Below that, we have support at 55.75 to 56 quarter, and then the larger time frame support, which marks the current short-term balance area low, is at 51 quarter to 53.75. So that's kind of the final spot where buyers can still step in and hold this balance together. Now, ideally, if the market is going to break to the upside, then you don't want to see ES pulling back all the way down to 51 quarter to 53.75 or 55.75 to 56 quarter. Then you want to see it holding above initial support, and if it's really strong, even above pre-market support. So the main idea today is the early morning session. The range could be fairly limited because of the FOMC announcement. We do have the oil number out at 9:30 a.m. Central Time, which can add a little bit to the short-term volatility. But overall, given that NQ has already extended itself around 4,700, and then we have last year's high in NQ around 47.16, it just seems that there's not going to be a whole lot of upside potential ahead of the FOMC announcement. Again, it doesn't mean that we can't make a marginal high or that we can't take out initial resistance by a little bit, but it does seem unlikely that we're going to really expand the range a whole lot one way or the other ahead of FOMC. So, the buy side short term is in control, but our short term bias today is going to continue to be neutral because either scenario can play out. Considering it could be a news-driven move or FOMC-driven move, either scenario can play out. By default, we are still going to give more edge to the buy side because that is the side that's really been dominant, and we are technically in a pretty defined uptrend, bigger picture. Short term, we've been balancing within a range, and the market has been setting up and is primed for a directional move one way or the other. But if you really zoom out, we are still in a larger time frame uptrend, and that's why the larger time frame bias continues to be bullish. And even short term, we've seen a lot of strength in the other markets, and that's why we have to continue to give more edge to the buy side. But at the same time, if we see any clear-cut signs during the day that the control is shifting, so like yesterday, for example, we saw a pretty significant momentum shift on the day time frame, then we need to be flexible enough with our bias to be able to adapt to that. And since we are at the edge of balance, there are two scenarios that can happen. One is that we get a breakout above 70 to 72 half. The other is that we get a failure and the market continues to bounce within a range. And that's why our short-term bias continues to be neutral. But we are going to give more edge to the buy side simply because that's the side that's been in control. But we want to see broad market strength, continued participation from the other markets, and some decent upside momentum in order to get a sustained breakout. Now, if we do get a sustained high momentum breakout, either right on the FOMC or a little bit after that, then on the upside, we could see a move into 79 quarter to 81 quarter. That would be within the range potential of the day. And then if volume really spikes, 87 to 89 would be a range extreme. So it's unlikely that the market's going to get to 87, 89, but 79 quarter to 81 quarter is a possibility. And keep in mind that above 72.5, we don't have any hard resistance because that would be the market printing fresh all-time highs. So those are the main ideas heading into the open. That's really the current market environment or the market context. So let's see if the buy side can continue to be dominant here above pre-market support and initial support, and we'll take it from there.